Welcome to Are You Financially Fit with Scotiabank. I'm Dekel.
And I'm Ethan. Today we're tackling a crucial topic for couples, making big purchases together and acquiring the right financial tools.
That's right, from your first mortgage to your dream car or maybe even a wedding.
Big purchases can strain your relationship and finances. But with a solid plan and good financial advice, you can turn your stress into success.
Our Scotiabank expert joining us today will share expert advice, personal anecdotes, and actionable tips to help you navigate joint spending decisions.
So whether you're newlyweds or seasoned partners, this episode will take you through the good, the bad, and the budget.
So grab a pen, paper, and let's get financially fit with Scotiabank.
Today we have Charles Wells joining us to talk about making that big purchase as a couple. Hey, Charles.
Hey, how you doing, everybody? Thank you for having me.
So, Charles, for those who may not be familiar with who you are, I just want you to introduce yourself. Tell us a little bit about who you are and what you do.
Okay, so my name is Charles Wells. I am the assistant manager of personal banking at the Carmichael Road branch. I've been with Scotiabank for over 12 years, and majority of my years has been in terms of retail credit in regards to making purchases, mortgages. I normally focus and specialize in mortgage purchases, lot purchases, and other stuff like that in regards to financing.
I have a question to lead off. I feel like debt is a word that scares a lot of people. For a long time, I was scared of debt. Ethan has a little bit of history in the financial space, so when we got together, we got married, he explained to me debt isn't this evil thing. But I want you to explain why do you think people have this bad perception of debt, and what good debt can do for you?
Well, I think firstly, people's perception of debt is in regards to it being a bad thing is that they hear the horror stories out there. And one of the reasons why they hear a lot of horror stories is that couples don't properly plan. Debt can be used to acquire assets and can also be used not only in acquiring assets, but also can help generate income for couples. And I think the stigma around it is that it has to be properly structured for each couple. And once it's properly structured for each couple, they can see the benefits right away. And I think that's something, hopefully here in this space, we can alleviate those
bad perceptions,
fears that may be out there as well, okay?
Now, I know that typically, you would incur, I guess, a large amount of debt when you're talking about big purchases, right? Mm-hmm. But, for the purpose of this conversation, Charles, how do you define, what is considered a big purchase?
All right, so when you're talking about big purchases, and particularly for couples, you're talking about purchasing vacant land. You're talking about purchasing your first home. You're also talking about doing your own home construction. All right, those are what we consider big purchases, and when we focus around couples in particular. And the good thing about it is, with those, Scotiabank has quite a number of facilities that can be tailored for couples and all types of couples. And so we have those facilities available for customers to come in, sit down, get pre-qualified, get an understanding of their short-term goals along with the long-term goals. And then from there, we can structure an application and get those couples to where they need to be in a short period of time.
So when it comes to couples making big purchases together, what do you feel, in your professional opinion, comes first? Is it the new house? Is it the lot or construction? Do they get a credit card together? Do they get, a new car? What do you feel like couples should focus on first?
Well, the first thing the couple should focus on is acquiring an asset, all right? And so normally that would mean that you're entailing purchasing a home first.
Okay.
Now, everything is based on the couple's dynamics. And so, you have couples at different stages, life stages, and so their needs may be different from other needs. So, for an example, you may have a newly young married couple who are just in the process of starting a home and starting a family. And so they may want to, their first thing is to acquire a home to shelter their family. Then you may have a more middle-aged couple who may already have assets, who may already have a home already, or they may have multiple properties, and then they may be thinking about getting a credit card for travel expenses, emergencies. And then you may have a couple who has a large family. And so if they have assets already, they're thinking about maybe doing an auto purchase, maybe a large van to transport family to and fro, home, work, school. And so everything is really based on where the couple is in their life stage. And from there, they prioritize that. And from there, that's where we probably start.
Okay, that makes sense.
All right, so Charles, now, I hear that, and I think it is interesting that you said, depending on where you are and stage of your life, right? Now, personally, I think the Kel and I's dynamic is a bit different, right? Because when it comes to talking about debt, we're both business owners. So she has a business, I have my business, right? Where does, if I want to acquire debt for business purposes, now, as a small business owner, even though there should be much separation, at the end of the day, my business has the potential to affect, or does often affect me personally, and vice versa, right? And so, because I am a business owner, if I want to acquire debt for the business, like how should we actually, or even the same with her, like how should we navigate that aspect of it?
Well, Scotiabank does have a business banking department where couples can go. They can have a relationship on both the retail side along with the business banking side. And so we do have a business banking department at our branch at Carmichael Road where couples can come in. They can open up their business account. They can bring their projections. They can bring in their goals that they want to accomplish. We have business banking managers and officers who can help lay out that foundation to help you acquire those assets. We normally do separate your personal from your business, and we do have experts who can help you structure your business in such a way where you can have that division between both, and you can also receive the benefits in regards to that as well, okay? So we have the online banking where you can transfer your salary like you're self-employed. If you want to pay yourself a salary, you can transfer from your business account directly to your personal account as well. And you can also get business banking facilities as well that will help you acquire further assets to help promote and grow the business as well.
Now, Joe, would you recommend us getting, or couples getting, a joint credit card? Because I know for a fact the Kel and I spending habits are somewhat different.
Very different, Charles.
And so, is that something that we recognize? And I'm not talking about, for joint stuff. I'm talking about, what, honestly, I guess this is even another good, what's the benefit of even having a joint credit card?
Well, there are benefits of having a joint credit card. And in terms of having the card, it also goes based back to the dynamics of the relationship. So let's just take for an example. Let's say you're a neurosurgeon and Mr. Kel is a teacher. Now, normally, your calendar per day is very busy. And so you may be finding yourself to work 12, 16 hours, but you're still a couple. You still have daily obligations that need to be met. If you're to work and you need to make a payment on something, the Kel can do that, being that you have a joint credit card. She can make purchases on the family's behalf, on your behalf, based on your scheduling, and that's something that can be discussed between the couple. And so I find, in my opinion, dealing with many couples of many different backgrounds, normally the wife really handles majority of the day-to-day expenses of the couple. All right?
You had me tell you said that last time.
And so, and it's vice versa.
I could swipe the card.
And so, sometimes you may find yourself in an emergency. You may be incapacitated, may not be able to move. Your spouse or your significant other can assist and make that purchase for you. And same way, she may be in a position where she's not able to move and you can make the purchase. So things like school fees, home improvements, insurance payments, So things like that you know are very critical and you prioritize for the home. That's a benefit of having that.
Would you recommend I have two questions. Would you recommend using the joint credit card for emergencies or like having one for emergencies? And then is there a special one? I know on the personal side, there are certain credit cards that get you rewards on like travel. Is there one for, because I like to travel. He likes to come with me. So I want to know, is there one on the joint side that has those perks as well?
Well, at Scotiabank, our credit card suite is very diverse. So we have cards that's just basic cards, if that's your need. We have cards specifically for travel. And we also have an affluent, very, very high-end card that we just would have recently taken on, the American Express Platinum.
I saw that.
And so we have all types of cards
I saw
available. And they can be for joint use as well.
So all the cards in the suite can be made joint?
Yes.
Is that how it is? Okay,
Yes.
that's good to know.
Yes.
I didn't know that. I thought it was like certain select ones were.
No.
Okay.
So all cards can be
Do you see
joint.
that? We can get a travel joint credit card.
And in that
Hey,
case,
you can do that. So, yeah, sorry, you can do that.
Is that the Arrow?
well, you
That's
can
the
have
travel one?
you can have the Aero Platinum. We also have a Visa Advantage card, and we also have a
And then
Mastercard.
the new one
Aero.
is the new one travel, the one you just mentioned.
Yes,
the
American Express Platinum. That's
Platinum.
also travel as well.
I like that one.
See, with credit card, you got to pay that money back, though.
That's why you use it for travel.
That ain't free money.
Use it for travel.
But that's the good
Jeez.
thing about our online banking services.
Charles, I
because-
ain't tell you no lie. You see, you come up here talking about credit card. My heart beating so fast now because my wife like travel. She like go for real.
But here's one of our great features with our credit cards, right? In particular with our online banking. You can, let's say, you're a business couple. Let's say you're doing a business trip, right? You're traveling tomorrow and you want to make a payment to your credit card. You can make a payment to your credit card online and that payment will take right away. That's live. You don't have to wait 2-3 days for that to reflect on your credit card. So we have that ability. And so our business customers and our retail customers, I really appreciate that because life is so dynamic right now. The calendar is being so tight and things are happening on a day-to-day basis. You need that level of flexibility where you can make that payment and then you can be able to payment and go.
So, I mean, we covered talking about the mortgage, right? But even outside of that's a pretty big thing to get into, which is significant other. And I mean, I imagine that there are other things. There's kind of like the in between. You got the credit card, you got the mortgage, and I feel like your car is somewhere right up in there, right? And so, one, would you consider a vehicle purchase a big purchase? And then two, like how should couples go about that? As far as, what should we be talking about? I mean, what are some of the things that we should talk about as it relates to a new purchase of a vehicle?
Well, vehicle purchase is not considered really a big purchase, but it is a vital purchase because it helps the family and the couple to get to work, get to school drop off, pick up, and so having a reliable vehicle is very essential. When you're talking about couples purchasing a vehicle, you want to take in consideration what's going to be the size of the family. Are you going to have a lot of children? Honey, do we need a minivan? Do we need a truck? Do we need a compact vehicle, something that's good on gas? With technology nowadays, having electric vehicles are now big on the market. And so, you take in consideration, what the budget in regards to gas, fuel, servicing the vehicle. And so it's a very important purchase because you have to go to work, you have to drop the kids to school, and then, you also have to run your business or do other things. And so having a reliable vehicle is very important. Okay.
Charles, I have a question. So, I know you may tell them cut this part out, but I have a question about when should a couple start discussing debt, right? We talked about debt earlier, how it has this negative connotation, and I think sometimes, or a lot of times when couples come together, each partner or each person in that relationship has possibly acquired some debt on their own, right? And so now they're coming together to make these bigger purchases, some of which may require them to acquire this debt now together, at what point do they disclose the extent of their personal debt? And then how is that handled? Like, how do you think a couple in that scenario, maybe one partner has acquired more debt than the other, one has acquired debt, the other one hasn't, and now they're talking about, merging finances, acquiring possible debt together?
Well, I think full disclosure needs to happen before engagement.
Yeah.
The reason why I say that is because the couple needs to know what's their full exposure.
Yeah.
All right, before you start planning a wedding, planning on getting a home together, building a family together, we need to have a full idea of what that exposure may be. One thing I would advise them is coming to the bank. Okay, in a relationship, there should be three people: the husband, the wife, and the bank, because finance is a very important thing in relationships,
Yeah.
especially in a marriage. And so having that full disclosure out there, it would help to understand where everybody is at, and then you could properly plan moving forward.
Yeah.
Because if there's a big exposure, you may have to say, okay, well, before we start planning for the wedding, we may need to reduce our debt to some degree.
What would you consider big exposure?
Big exposure is relative because
Like loans?
loans, anything unsecured, over $50,000, that could be a sizable.
Big exposure.
That's a sizable exposure.
Yeah.
And when you're talking about starting a family, purchasing a home, you want to have as minimal exposure going into the marriage, due to the fact that you know that you plan on getting your first home, maybe purchasing a lot, purchasing a vehicle, maybe preparing for a baby.
Family?
And so those type of things you want to take in consideration. And, some couples may not be financially savvy, and so that's why we ask them to come into Scotiabank, speak to one of our financial experts, and we can plan that out for you.
So, Charles, the next part of my question, you mentioned you would consider like big exposure to be 50,000 plus. So does that mean that if a partner in the relationship has something under that amount, let's say 10,000 less, do you feel that person should still explain or walk that partner through? Or how transparent should that partner in the relationship be with that not so big exposure?
Well, in terms of exposure, the Bahamas now, we would have just recently started the credit bureau report. And so all of the debt exposure is now available for review. And so now in terms of if one individual has an exposure of 50,000 and the other one has a less exposure, it really is based on what that exposure entails and that payment amount and how comfortable the couple feels about reducing that before going into a more financial exposure. Because at the end of the day, you want the couple to have the best possible position. All right, we at Scotiabank, we want them to be financially fit, correct? And so if you know that you're going to get married, start a family, purchase a home, understanding what exposure you have and being able to say, okay, well, honey, we may have to put off the wedding maybe a year or two so that we could work on reducing that debt so that we have the ability now to free up our salary somewhat to
have that big lavish wedding.
Correct, or to start on working on a home.
Yeah.
And so, that's something that a couple has to work together. They can come into the branch, speak with an expert and say, well, listen, this is what we have out there. Help us to get to this point.
So I feel like it all should be laid on the table, big, small, in between.
Everything.
Okay.
Everything.
Okay.
Everything.
So, Giles, you talked about, servicing the debt and making sure that, your loan payments or whatnot. But the question that I have is how much of your budget should actually be allowed or allocated to debt servicing? Like, I know some people, when I was at the bank, had, debt servicing ratios of 70% and above, right? And so, like, how much of your budget should go towards actually servicing debt? And then how should that debt servicing line item be allocated? Like how much of your budget should go towards your mortgage payments, your this, that, next? If you kind of expound on that.
Well, in certain scenarios, the maximum, I think the maximum right now is 50%, right? But the sweet spot, I feel, for a couple should be anywhere between 25 and 30%, right? And so that means out of your total income, 25 to 35% of that income should be going towards servicing debt. The reason why I say that is because, there's a term out there that people say life is really lifing. And so you have to take in consideration emergencies, take in consideration death in the family, medical expenses, things happen. And so you don't want to max out yourself right away. The couple should be able to have, let's say, about 25 to 30% of the debt, and that debt should be servicing primarily the mortgage, maybe one credit card and an auto loan, right? That's the standard for a family. Now, in the event where an emergency happens, where someone has an illness or something, and then you might need to come back to the bank to leverage more capacity, then that space is there. But if you right away come out and max out the debt service ratio, and then an event happens, then there's no space in there to allow for emergencies. And so I always say really the sweet spot is anywhere between 25 to 30%, okay? And just leave that maybe 20% in there in the event of any emergencies or life expectancy.
If lifestyle, life in.
Yeah.
Awesome.
I have one more question, Charles, before we close out. I want to know, it's not something we enjoy talking about. I don't think anybody enjoys talking about potentially departing, right? Or when you depart, how do I avoid leaving my partner with debt? Like whether it's my, the joint debt that we've acquired together, my person, like what do I do or what can he do to make sure we don't leave the other person with debt?
Well, at Scotiabank, all of our credit facilities have a insurance option that is attached. It's not mandatory, but we normally, when we have these conversations with customers, we let them know the benefits of having insurance on your credit card, having insurance on the mortgage, having insurance on your, let's say, auto. In the event something untimely happens to one of you, that insurance can cover and close out the bill, and so that won't be leveraged against the estate. And so, we always try to encourage customers
to get the insurance.
To get the insurance because things happen, okay? And the thing about it is having the insurance protects the whole entire family, all right? When you make sure you have that life insurance on the mortgage, in the event something happens, the mortgage can be paid off. And so you won't have to stress about having that on your mind of how am I going to pay this mortgage with a reduced income. And so that's something that we at Scotiabank, we navigate our customers through. We go through that in detail from start to finish.
Awesome.
Thank you, Charles, and thank you for tuning in to today's conversation on planning big purchases as a couple. But wait, remember, you have a chance to win 3 months access to my Flex Squad app and a Bowflex Barbie merch bundle for you and your partner if you follow these instructions. Make sure you watch all 3 episodes and comment the keyword that appears on the screen in each episode. Also, make sure you're following Scotiabank Bahamas.
Remember, when planning your milestone purchases, communication is key. Start that conversation today with your partner and financial advisor from Scotiabank.
Also, share your thoughts in the comments below using #FinanciallyFitWithScotia.
If you want to learn more about the resources mentioned in this episode, visit Scotiabank's website at bs.scotiabank.com.
And make sure you're following at Scotiabank Bahamas on Instagram to know when the next episode of Are You Financially Fit goes live.
See you next time.